Hello everyone, Jesse Webb, Traders Pro. Market conditions still in a bearish state, bearish in a bull market. Finding some support here, had a decent move yesterday, and let's talk a little bit about that. We've seen the momentum indicator hovering around this extreme level right here, but we're also starting to see it move back up this other direction. Let's see what breadth did also today or yesterday, and still in that oversold area. Got a decent little pop. Let's take a look at that price pattern. We also saw buy-sell ratio. This is an important one to look at and consider right here at these levels, because we are very extreme, as extreme as we have been on any of these downturns in the last year, and that's just not a sustainable location to be sitting at for very long. We're also seeing a little bit of divergence on the sentiment indicator. That's also showing some price activity, which is bullishly constructive here. If we look at S&P 500, the 1 year time frame, we've talked about this area where it's this 416 range. It's got a massive amount of support right here. Markets have been here. In fact, if I were to go back even further, that price area has been really significant. There's a little bit of support right here that you can see where the market is kind of holding up on those. So we certainly could test that 416 range. We got a little bit of a bar here. Let me get rid of that volume and go in a little bit closer. Even on the 3-month, obviously has flipped to that bearish trend. When you're clicking on these buttons, it'll automatically snap to the current trend of that time frame. So we obviously know that 3-month time frame is down. The 6-month time frame is still a bullish uptrend, and it's attempting really to hold this buy zone, this 50% 618 buy zone. It slid right through that, and now it's running into some resistance. That's got to get back up above that and then start to hold some support. If this becomes resistance, and this zone right here, you can see that line that's drawn. If that continues to create this resistance, and then we can't break through that and close back up above it, then we're probably going to head down to that 419 range. It's not that far though. It's just sitting right, just a little bit lower than where we're at. So if we were to gap lower or move lower, and we're going to see some volatility more than likely over the next few days anyway. But this is a pretty significant area for us to be focusing on for a continuation of this trend. It's obviously a nice bullish trend. We've had it now for basically a year. This was October 14th of last year, and here we are sitting right at October 5th and dealing with another counter trend. So we'll see if we get in. This October typically is and September typically volatile months. We'll see if we get some continuation here. We are also seeing that buy-sell ratio, which we've talked about on all of these indices, it's just really nasty. In fact, S&P 100, are you kidding me? Like two stocks in the S&P 100 have uptrends. That's either anticipating massive additional selling, and insiders know a whole lot more than we do, but that also is not sustainable. Time and time again, when we get to these areas of just these deeply oversold areas, all it takes is for just a little bit of a swing, some short covering, some new buying. Then we get fear of missing out, and that FOMO effect pulls more money into a buy location. So these are the early areas to really be paying attention to. We've also been talking a lot about bonds and oil, and this ETF, I've referenced it a couple different times, PFIX. That's interest rates, and you can see what interest rates have done in the last year, just straight up now. That's also not sustainable. We could see it. We saw a little bit of a downturn yesterday, and we saw TLT, which is the bond ETF, also moving sharply to the downside. Let's pull in that chart here, TLT, and just these are really the main talking points of the market right now. Is interest rates and oil. We saw oil really get hit yesterday. We'll look at that USO chart, but if we could see any kind of stabilization, you can see where the downtrend momentum zone is on this pattern, where we have all the way back up here. This is now the downtrend zone, just like on our uptrend zone is the upper quarter moving here. here, this downtrend zone. So you can see how far away we are from that. We could rally all the way back to this area, back to this 90 on bonds. That would be definitely welcome, and I think it could certainly happen quickly. We've got everything, everything's set up for that nasty downtrend. We're at the extreme of that downtrend and in an unsustainable location. So we'll keep an eye on that. Also, if we look at go to sectors, go to commodities, go to USO right here. We'll take a look at that and see what's happening with USO. You can see yesterday just oil down 5%, slicing. That's a good thing. I do not like to fill my truck up right now and spend $95 on gas. So this could drop down for all I care, cleared it off the table back to $10. That would be fantastic. Nonetheless, we also saw some of these Dow stocks. If we look at if you go to the index scan tab right here in Dow, there's actually a couple of stocks that are in this hold range. Let's see. They were stocks that had been an uptrend and they started to move lower. Two of those were ExxonMobil and Chevron. If you look at Exxon, so Exxon really got hit. Now also back in that deeper retracement, 50% retracement. So we certainly could be seeing a shift. If we could get oil to drop, if we could get bonds to rally, I think we'll see equities at least have a little bit of a reprieve rally. Muscle stocks, there's actually some good looking stocks in here today. SMCI, this is a stock that's been retracing, had an uptrend, a little move lower yesterday and back up 4% today, 2 days ago, and then 4% yesterday. That's one to keep an eye on. It's starting to find some strength. Medical bio, NUVL, don't know what the news story was there, 35% to the upside, back to the extreme. We've seen these before, and when they move this strong, I typically want to give them a day or two to see if you get a massive retracement back, 35% up and 15% or 20% back down, and then see where the dust settles on a stock like that. EDU is a really nice pattern in the momentum zone, sitting right here with this buy profile and in this upper location here. That's the type of stock we want to continue to look for, a stock that's moving higher. It's in this upper range. It's finding some support. It's moving higher, retracing, and starting to get some confirmation on buy signals here. LYTS, this is also a nice looking stock in the building sector and moving higher. Again, same profile, early in the buy zone, meaning it's just gone from this hold to a buy. It's in the upper range. It's in that momentum range. It is retraced. In this case, it's retraced to a 382. Had a big run here, counter trend, and now it's starting to work its way back up. And those are the kind of stocks that we want to continue to look for, LYTS. There was one other one here that looked pretty good. Again, a stock like this, if you see one of those are typically buyouts. Sometimes takes a couple months to clear out of the system before the symbol actually changes to the company that bought the stock. BRBR, medical stock, nice uptrend. It's now snapped to the new high here. Not a real impressive bar, but it is in that upper zone and had a new buy signal. So a little bit deeper in the list, you can go through and start to find some additional stocks that are showing some promise. That'll do it for today's update. If you don't have full access to the site and software, you can sign up with the link below, and we look forward to having you. Have a great day today.